All right, welcome to Elliott Wave Night School. We are going to see if we can Trading Night School. We are here. I'm having technical difficulties again. So sorry. Trading Night School. We're going to see if I can get this stuff taken care of. I had all this set up, and for some reason, I'm doing something wrong in the setup. So hopefully, you guys can find me and. Let me know when I am found. See if I see it. There it is. Okay, good deal. Let me know when you're here. Let me know if you're around. Lesson 2, we're going to be covering the psychology of an Elliott wave. And we're going to go over telling the difference between Elliott wave structures. So it's going to be awesome. Psychology of. I had all this set up, guys, and then something's wrong with the way I'm setting up the live stream. So I'm going to have to do some practice this week before next week. So glad y'all are here. Just chime in. Let me know when you get here, guys. Let me know if you sound and video good. Awesome. All right, let me change the thumbnail here. Just 1 second. I had all this set up. It was ready to go. Hopefully, did you guys find like a page, like a waiting page? If there is, go back to it and let everybody know that I'm here if you can. There it is. All right, got 7 of you in the chat. We're going to get started here. I'm just going to kind of give just another minute here. Oh, baby. What's up, David? Glad you made it. All right, guys. Tonight we're going to cover just the psychology of an Elliott wave. Okay, I want you to understand why trading waves mess you up psychologically. So I want to kind of start with that for about 15-20 minutes, and then what I want to do, guys, is I want to show you the qualitative difference between the 2 different types of structures that you're going to find in Elliott wave. I'm going to teach you to determine the difference between the 2, because if you can determine the difference between the 2 types of structures that you find basically in an Elliott wave, then you can determine direction. Okay, and direction is key when you're trading. You know the direction, you can trade with the direction. Okay, and so I want to teach you guys those things. Okay. Thank you for posting that. I appreciate that. I don't know. Let me go to the event and cancel that event and get everybody over here. Channel dashboard. Sorry, guys. Okay, that's this one, so we're good. All right, I guess we're all right. Stream health looks okay. Good evening, Brentley. Welcome. I think I'm just gonna, from now on, just go live rather than create the event and then try to start it. I'm just gonna go live because see, this is 2 times now that I've had problems with it. So I apologize sincerely. All right, there's 15 of you here. I'm just going to give another minute here. Just chime in when you come. I want to know everybody that's here. Here's what you need to have set up, though, to get started in the class. need to have a phone where you can watch the live stream on, or have another laptop or another computer, or an iPad or something that you can watch the stream on, big enough that you can understand what I'm doing, and then have a laptop in front of you. Okay, you need a computer in front of you so that you can practice doing what I'm doing. Okay, it's going to be hey John, what's up, man? Glad you made it. Welcome from Colorado, David Lake. All right. Yeah, I again, I don't know what's going on with the thing. It's frustrating me. Okay, what's up, Amid Reza? Amid Reza? I don't know how to say it. I wish I did. I'm gonna call you Hami. Welcome, buddy. Glad you made it. Glad you are here. All right, there's 19 of you here. I'm going to get started teaching, okay? So again, some of you are just kind of coming in. Here are the goals of the class. The goals of the class tonight, I want to talk about psychology again, because listen, guys, you can understand Elliott Wave. You can know all about where price is going, and if you got a bad psychology in reference to this, you can still lose trades like crazy, okay? So learning Elliott Wave isn't the only thing that you're going to need in order to trade, and all of you in the trading group, you know that by now, right? You know you can lose trades without good psychology. All right, and you can mess up big time. So we need to talk about that for the first 15-20 minutes, about the psychology of an Elliott Wave. I'm going to show you, and something's going to click tonight. I promise. If you watch, it's going to click. You're going to be like, oh, that's what's happening to me. Okay, so I want to talk about the psychology of the Elliott Wave, and then I want to talk about the difference between corrections and impulses. Okay, so as you look at the two different types of structures in an Elliott Wave, you got a correction and you have an impulse, and you need to be able to distinguish between the two, learn the characteristics of them, and use the Fibonacci fib extension tool to be able to determine the difference between the two different ones. Okay, so let me show you an application of what I want to teach you tonight. Okay, so I'm in this trade right now, and if you're in the trading group, you might be in it or looking to be in it. Okay, and so you can see all this stuff on the chart. Just don't worry about it too much there. What I've been looking for here is I wanted to see a corrective wave. So I'm asking myself, I'm working on a hypothesis that this right here is an impulse wave to the upside. It's like a one wave, okay? And the way I'm counting it is 1, 2, 3, 4, 5, okay? Not perfect, not the greatest, but a potential count, okay? So that's a 5 wave. And then that means I'm going to get a 3 wave to the downside. And it's got to measure correctively and be 3 waves, okay? So you can see right now it's looking fairly decent. We got 1, 2, 3 waves, number 1 criteria. Number 2, let's see if it measures correctively. When we put it on there, that we have this 3-wave structure that comes down to the 1276 fib level. Okay, now the final thing we need to look at is, does it have the wave structure we're looking for? Well, what we have is really hard to count this guy right there. There's just no counting that. I don't know how to count it because the waves aren't there. So we're going to call that a 5 wave. Then I've got this flat correction right there. That's the second wave. And then I've got 1, 2, 3, or an ABC. Okay? Or is this 1, 2, 3? Is this 4? And we're going to go down for 5? Still could be okay. Because the structure of an Elliott wave correction, once you learn this, is going to be generally an ABC, A, B, C. That's a correction, and it's going to have 5 waves to it. In the A, 5 waves in the C, 3 waves in the B. Now that's a standard zigzag correction, okay? Which is what I'm thinking this might be. Now it may not be. My interpretation of it might be wrong. But that's what I'm looking at. That's what I'm analyzing, and I want to see, okay, so I'm working off this hypothesis. And so this is how I'm trading, and I'm going to teach you guys those characteristics and how to do all those measurements tonight. We're going to get that. That's going to be the second half of the class, okay? Yes, exactly. Market analysis with the schooling. Okay, so we're going to apply what we're learning right away. So, but we're not going to talk much about the market analysis. You guys are going to have to, you know, learn what I'm teaching you. This is more important. Okay. So anyway, so this is an example of what I'm doing tonight. That's it. So I'm assuming that we might have a finished ABC here, and that we're starting a one wave to the upside, followed by a two wave or something like that. So I want to see an impulse wave come. You know, I want to see like 1, 2, 3, 4, 5. I want to see that. That's what I want to see. Something like that. Okay, like right here, that's an impulse wave. Now this is drawn kind of big, right? But this is an impulse wave. This is an impulse wave. Okay, this is a correction. This is a correction. And so when I see these impulses here, I'm thinking, okay, is this changing directions to the upside? And is this, so that's what we want to begin to think about tonight, is how can you differentiate between the two Elliott wave structures. But before we get into that, I want to finish talking about psychology last week, and then I want to talk about the psychology of an Elliott wave. Okay, all right, there's 19 of you. Glad you made it. You guys are the serious ones, so glad you're in here. Let's jump in. All right, last week we talked about psychology and why you lose trades. The biggest deal about losing trades is you got to learn to control your three emotions. Okay, there's three emotions that kill your trading. I just want to remind you. Okay, there's fear. Okay, there's hope, and there's greed. Let's talk about the two: fear, hope, and greed. Make sure you have your. I'm going to just kind of make those bigger. So what's fear? Fear is fear of missing out. You're seeing price go up, and you're like, I don't want to miss out. I want to get in on that trade. I want to make money. So you have fear of missing out, and so you will enter a trade at a bad location, and it'll cause you to lose trade later on. Okay. Fear of entering a trade. You see a setup, you're like, but I don't know if it's going to be a win. Maybe you've lost a lot of trades in a row, and you're like afraid of losing again. And so fear will get you into the market in a bad place, and it will keep you from getting into a market in a pretty good trade setup. So fear will kill your greed, your trading. Hope. Now, a lot of times you'll get in a trade and then the trade will go against you. And rather than cutting the trade, what you'll do is you'll hope that the trade will, oh, well, I didn't cut it. Maybe it'll come back for me. And so the trade gets away from you. You kind of maintain some hope. Maybe it'll come back. And I always do say, chill, the market always comes back. And it does. It may take days, guys. It may take hours. It may take days. It might take weeks. But the market will come back. There's no doubt about it. But you need to learn to cut a trade properly at a small loss. So fear of losing, and then hope of what hope will do is keep you in a bad trade, and you'll actually end up losing a lot more. What's up, Ivan? Glad you made it, man. Glad you made it. So we talked about fear last week. We talked about hope keeping you in a trade. Oh, I hope it goes my way. I hope, and it just keeps on going away from you. And before you know it, you're like, daggone it, you're underwater in the trade. And then you maintain to that hope. Well, maybe it'll come back, and it's just crazy. It's bad. Okay, and greed. How does greed kill your trading? What it does is, you'll be in a good trade. You'll be like, oh, I'm in profit. I got $300. Woo! And it's a great trade, right? And you're like, oh, well, we hit my target. It's probably going to go more. And so I'm going to hold on to that trade. And you hold on to it, and because you want more, and you want more, and you want more, and then eventually what happens is it starts coming against you. And all that profit that you had, you end up losing half of it. And you're like, daggone it. And so then you got fear of losing, and so you cut the trade. And then it goes the way you thought it was going to go anyway. And so and that's kind of what happens. Fear, hope, and greed. Okay. Let me hear in the comments if you've experienced any of those things as you've been trading. Has fear messed you up? Has hope messed you up? Greed messed you up? Let me hear an amen or something just to let me know that you're listening. And yeah, that's you. You've had either any one of those emotions or all three mess you up in your trading. All of the above. Okay. So guys, when I start with a psychology lesson, it's cool as ice. Nice. I love it, Ivan. I love it. I love it. So when I start a series, you guys really y'all want to get into the Elliott Wave stuff, right? You're like, oh, teach me how to read the chart like you do, and some people's like, Jim, how do you know where the price is going? I don't know where price is going. I just know how to read Elliott Waves and give some projections as to where it could go. It might go, and you hear me use the word. Potentially all the time. I want to make sure that you understand you're not going to know exactly where it's going, but you can have a general idea of the direction and the probabilities that are associated with it. So that's what you guys want to know. But to be honest with you, that's not what you need to know. You need to know how to overcome fear, hope, and greed. You need to learn that and understand that first. And so that's why I preach most of that, because that's where you lose your money. But if you can just begin to get a handle on those things and recognize when you have fear going on inside of you, or hope is keeping you in a trade too long, or greed is not letting you take profit in proper places, then you need to learn to recognize those things, okay? All right, there's 25 of you. That's awesome. I'm glad y'all are here. Okay, so that's a review from last week, and there's more that we talked about. These emotions will get you into a trade in the wrong place, and that's another reason you have bad entries and bad exits, okay? So we need to learn along the way, not only with that, with the psychology, we need to learn good entries and good exits, and those strategies, and we're going to learn some Elliott. I'm going to be teaching you an Elliott Wave strategy, just a basic strategy that you can begin using on higher time frames, and I want to encourage you to trade on the higher time frames, and I'm going to be leading our trading group to trade on the higher time frames. Okay, but for now, what we're going to do is we're going to look into what an Elliott Wave setup looks like towards the end of the lesson tonight. Okay, so that's where we're headed. Tight stop loss has got you, and you have to learn how to keep your stop loss out of reach, and so you got to learn where to put your stop loss, and that's another aspect of what we're talking about. Where's the invalidation point of your trade? So we're going to talk about stop losses in later lessons. We don't have time to cover it all in one night, so this is just going to be a series of weeks, guys, and we're just going to begin. You're not going to miss out on Bitcoin's move. I'm going to be giving you direction and ideas on the YouTube every day, and anyway. Okay, so there's a recap of last week. I wanted to remind you of those things. Now let's talk about the Elliott Wave structure and what it does to you emotionally as price, for instance, is coming down. Now, in every market, it's made of buyers and sellers, right? So for every seller, there needs to be a buyer. For every buyer, there needs to be a seller. Okay, now the buyers are buying because they think price is going to go up, right? And so generally, as price comes down, buyers get excited because the price is getting cheaper, right? How many of you were like, when price was at like 10,000 Bitcoin, and you were like, man, if price ever gets down to 7,000, I'm buying, and it doesn't matter, or 8,000, I'm buying, and it doesn't matter. And now all of a sudden you're thinking, oh man, price is at $8,500, but it might go down some more. And so now your psychology is still not where it needs to be, because you don't want to get into the trade because you're thinking it's going to. So there's some psychology there of buyers that, well, if you think you can get it cheaper, you don't want to buy it now. But the problem is that's greed, right? Because you're waiting and waiting for a cheaper price, and eventually the price is going to turn the other way. There's going to be too many buyers coming in. The price is going to go up, and you're like, oh, and I missed the sale. And then all of a sudden you're going to buy more expensively than you had the chance. So that's another way greed will get you. Okay, but sellers are the same way. As price is going up, oh, it's going up, I'm not going to sell yet. It's going up. What if I sell it now and it goes up? I'm going to miss out, right? It's fear of missing out. So you hold on to your coins too long, right? And so you got to understand those emotions, okay? But that's going on with buyers and sellers all the time. Okay, you want price to go up, price to go up. Sellers want to get their price up so they can sell at the top. Buyers want the price to go down so they can buy at the bottom. Okay, you got and that's basically what it is. Okay, and so you got a market is made up of sellers trying to get the highest price and buyers trying to get the lowest price, and that's what a market is. Okay, now let me explain to you what the Elliott Wave structure does. Okay, so we're going to start with an impulse wave, guys. Let me teach you two words that I want you to remember tonight. And two words are impulse and correction. Okay, impulsive or corrective. Those are words you're going to hear me use all the time. Is that an impulse or is that a correction? Is that an impulse? Is that a correction? Okay, two words. Okay, repeat after me. Impulse and correction. All right. So remember those, write those down. You'll need to know that. Now, an impulse is made up of 5 waves like this. We're going to talk about that structure later, but for now, there it is. There's 5 waves. An impulse wave can go to the downside, or an impulse wave can go to the upside, like so. It's 5 waves. It's always 5 waves. So that's a basic Elliott wave as far as an impulse wave. Okay. Now a corrective wave. So there's 2 different impulse waves. They'll crisscross. Now a corrective wave is always going to be 3 waves. Okay. There's a correction to the downside, and we label that ABC rather than 1, 2, 3. We label that as an ABC, and a corrective wave can go to the upside. Just like that. Corrective wave is always 3 waves. So in general, impulse waves are 5 waves. Corrective waves are 3 waves. Okay? So here is an Elliott wave structure right here. This is when price is going up, corrections are down. When price is going down, corrections are up. That's as simple as that. That is the Elliott wave structure right there. Okay, so you'll notice just a couple of things as we just look at this this structure. There's 5 waves. They're not all the same size. Generally, 1 is often the smallest, but it doesn't have to be. But 3 is often the largest, but doesn't have to be. Okay. 5 is often the same size as the first wave, but it doesn't have to be. There are so many different variations of what a wave generally looks like. Okay, but 3, those are some basic characteristics. Okay, doesn't matter whether it's to the upside or the downside. Okay. All right. Without going into any more detail, let's talk about the psychology of what happens as a wave is moving. This is critical, guys. What I'm about to tell you, big deal. Listen to this. You're going to understand it. You're going to be like, oh, that's what's happened to me. I know exactly what you're talking about, Jim. Let me explain it. Okay? Let's see. Max says, if anyone has to write 2 words down to remember them, they're going to struggle. Come on, man. All right. Okay, here we go. So let's talk about price as it's coming down. So who's happy when price is coming down? Who's happy? Somebody answer that question for me. Who, sellers or buyers when price is coming down? Who's freaking out when price is coming down? So who's happy? Dun, 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 dun. The answer is yeah, but buyers or sellers? Taps. There you go. Price is coming down. Buyers are happy. That means who's not happy when price is coming down? The people that are not happy are the sellers, right? Okay. The hodlers. Correct. All right. So price is coming down. All right. So let's talk about it. Now, for a seller, he's watching price do this, right? He's like, oh, look at that. Oh, little correction. No big deal. Little correction, right? Now let's go back. Here's what happens to a seller. Seller's got his Bitcoin. He buys it down here. Price is going up. How's he feeling? What's the emotion rate as he begins to start? He's excited. He's excited. Oh, there's a pullback. Ooh. What happens to the emotions now? What happens to the psychology now? Okay, on the pullback. Gets a little worried, but he's thinking, just a correction, no big deal. It comes down. Oh, it's coming down. Oh, emotions are starting to get up there, right? It's coming down. And if it's a deep correction, oh no, it's coming. Oh, he's freaking out because it's back down to his price where he bought it, right? He's freaking out. But then all of a sudden he gets that candle to the upside. Oh, so good, so happy, right? Got to bounce, right? He's excited. and it starts going up, and it goes up beyond that first level. He's like, "Oh, I'm in good now." He's good, and maybe this is the third wave. He gets really, really excited, right? Oh man, look at that, and he's excited, right? And along the way, there's just these little pullbacks, little pullbacks, little pullbacks. He's like, man, it's going to the moon, and he's excited. That seller's like, man, price is going up, and it gets up there, and he's like, I'm not selling because it's going to go up some more because it'll pull back just a little bit, and it keep on going, pull back just a little bit, and in his mind, he's like, it's going to keep going, it's going to keep going, and before you know it, there's this big red candle, boom, just like that. I don't have red on there, but he. Let me see here. Let me get red. Boom. Okay. Oh man. And so what's he do? Price is going. It's going down. It's going down. So what's he do? Now, if he's patient and cool, he's going to hold on to it, right? He says it's just a correction. It's just a big correction. It's going to keep going up. So what happens? Well, it goes down, down. He's starting to freak out. But then he gets that pullback. He's like, I feel good because it's going my way, right? There's emotions. Okay? Then, dude, focus on what I'm saying, not, daggone it. Then price is going his way. It's good. And then he gets that another pullback, and it's deeper. And he's like, oh no. He's starting to freak out. Now, he might have sold it down here. He's like, I got to take my profit. And he sells it. So he bought here, and he sold here. Did he make profit? Sure he did. Did he make as much as he could have? Nope. He sold it here. And you know what happens to price after that? Boom. And he's like, oh man. And he's got seller's remorse. Price goes away, right? Because this is this is the psychology of what's going on when price is moving, okay? And this is how price moves. So if that guy has no concept of how the market actually moves and the patterns that it makes as it's moving, his emotions are going to rise and fall based upon whether price is going in his direction or going against him. And he's going to let his emotions help him make the decision. And he's going to make bad decisions with his money. Does that make sense, guys? Are y'all following that? Now, that's just the basic, just a basic concept. Now, what this guy will do is, as price goes back up too, if he's dumb, he's like, I better buy because it's going up, and his fear of missing out is gonna get him to come in here. And we know what wave this is. Look at this: 1, 2, 3, 4, 5, and this last wave, he buys up here because it's going up, and he's gonna miss out. And what's it do? Boop! It goes down on him. Okay, let's clear that. Get Joe's mind out of the gutter. The same thing happens when price is going down. Okay? Same thing happens. So I'm not going to go through that as price goes down. Now, let me explain to you what happens with the Elliott wave on each wave if the trade is going against you. Okay? So if the trade is going against you, so if price is, let's just say price is coming down. Right? So price is coming down, and so that means I'm a seller, and because price is going against me. Okay? So right now I'm a seller. I want to sell, but price is going down, and that's not good for me. I want price to go up as a seller. Right? And so, but price comes down, and I'm like, but it just goes down a little bit, and then it retraces almost all the way back, and I'm feeling pretty good right now. Oh, it's going up. I'm good. But then all of a sudden it turns around again. And this next wave that happens, okay, so the one wave is just a small one, not a big deal. And then the two wave can retrace pretty deeply, sometimes all the way back to number one, or 50% or 60%. It's pretty deep. But when it gives it back, when the trade's when it gives it back to you, you feel good. You feel okay. You're like, oh, I got some confidence. I'm good to go. But then all of a sudden, the next wave is the 3 wave, and that's the big one. And what it does is that big fast candle that comes way down. And you know what that wave is designed to do? That wave is designed to get your emotions flipping out. Okay? Let me just finish drawing that. Because if you bought, let's just say, price was going up, right? And you bought it right here. That third wave to the downside, it comes all the way back down to your price, and you're freaking out, right? And then what happens? You end up selling it and losing all of your profits, right? Because that wave freaks out. But let's just say you hold it. Let's just say you hold it for that wave. Let's go back. Red candle, the first wave, I'm okay. Retrace, oh, I'm really good. Boom, really fast. Oh, you're freaking out, right? But let's just say you hold it. And then you get that fourth wave pullback, and you're feeling, okay, every pullback gives you better psychology, right? It gives you a sense of, okay, prices could be going my way now. Prices going my way now. And then what that fifth wave does to you, it's like, oh, no, I'm getting out. And then you end up, it's like that last push. It's like there's a wave 1 that kind of punches you, and you're like, okay, I'm all right. And then that wave 3 gets you out of breath. You're like, oh, and you're freaking out. But then you get that pullback. Well, maybe it's just going to pull back in reverse from here, okay? Because what you're thinking is you want this. Because after 3 waves, you're thinking it's going up, right? And so that's what you're thinking. That's what you want. But that last wave, that fifth wave, is designed to get you. It's designed to take your money. Okay? And that's when most people end up selling. And you know what happens after that fifth wave? That's when the market reverses. That's when the market reverses. Okay? So what I usually tell guys, if somebody says, oh, I'm really deep in the hole in a trade, what should I do, Jim? So let's just say they bought down here. Price is coming back in 3 waves. And I'm like, okay, what do you do here? Do you sell? Well, you can sell for break even, or if it comes back below your price, okay, what do you do on this third wave? Personally, if I've held a trade that long improperly, I wait it out, because after that third wave, what happens? You're going to get a fourth wave. That might be the time to get out, or you're going to get the fifth wave, and then there's going to be a 3-wave pullback. However long that takes, we don't know. Wait for it, because the market will come back, and then you can end up taking some profit there, something like that. So that's the way we think. But again, what I'm trying to show you is that an impulse wave, there's psychology of buying and selling within these waves. That this is how you feel, and these waves are just they're measurements of your emotions, and they're also used against you by the market makers. Okay, because they know what you're looking for. Okay, I'll just take a minute. Any questions or comments there? Oh, absolutely, Taps. This is absolutely applied right now. Okay, let's just take a quick minute and apply what we're talking about. Let's go to the large scale for a minute. Man, my chart is just full of stuff. When you learn how to use fibs, that's what your chart's going to look like too. I guess I could have just cleared it all. Let's just remember, how is the psychology of the market? Wave 1, oh, it's going up a little bit. Now how are you feeling at the end of this bear run? It was just, oh man, let's go back. Let's remember your psychology. Just remember it. Woo! Everybody's on cloud 9, baby. Oh, it's going to the moon. It's going to $30,000. Woo, baby, this thing can't go down. Oh, boom. First wave down. Oh, people sold down here. Boom, straight back up. It just, whew, that's what the market did, right? People got wrecked here. Big time. On this candle right there, down to $10,000. That one candle, down to $10,000. Oh man, people got wrecked. Okay, so price, now this took a year and a half, guys. This is a year and a half, or a year, all the way to here. 1 year. So price is going down and down and down. It's like hitting you. Boom, boom, boom. And then what it did, remember this? For just months, it just went sideways just for months. Until price wasn't even moving. Now some people were like, oh, it's going to break up. Some people, it's going to break down. You got the bulls and the bears fighting it out, right? And then what happened? Oh, it was a nasty day. I remember it. Nasty day. Boom, 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 boom. Over several days, right? But when that first candle came, ooh, man, right? And it just kept coming and kept coming and kept coming. So how did you feel? You felt pretty beat up, especially if you're holding. If you're holding the Bitcoin, you're feeling pretty beat up down here. So what happened? Price went up a little bit. That feels pretty good. Then it starts taking its time. Oh, it's just going to keep going down. Because it went up here and went down. Went up here and went down. So how do you feel in here? Oh, it went up. It's just going to keep going down. So everybody's still bearish. But it doesn't do that. There was a day. There was one day. I mean, it happened in a second. In one day. Look. Boom. That candle straight up. Boom. And then a bunch of days, like 7 or 8 days of sideways. And then one day, boom, straight up. 4 or 5 days sideways. Boom, straight up. Okay? Okay, let's just look at that for a second. That's an Elliott Wave sequence. You say, where's the sequence? Look here. 1, 2, 3, 4, 5. Okay? It's a 5-wave sequence. But Bitcoin will only go up whenever it goes up. It happens in a day, generally. Pretty much a 1-day period. You get that big candle on that 1 day. And then it's just sideways forever. And then it's what it does to you. And then breaks out on the next on a day you don't expect. Right? But then it just kind of kept going up. And so as price is going up, now there's some people say, oh, it's got to stop right here. It's got to stop. It's a 3-wave correction, right? It's a 3-wave correction. We're going to get more downside. And then all of a sudden, what happened? Price went up. Price went up. Price went up. Oh, and by the time price got up here and started consolidating, man, it's going to the moon. I mean, we're going to go. And then, boom, when this started happening, oh, man, got up to 13.8. Where's it going next? It's got to keep going. It's going to 15. It's going to 17. It's going to keep going. No, but what did it do for the last 3 months, guys? It's been coming down and down and down. It's been hitting you. And now you're back in that psychology. Okay, where's it going to go? Where's it going? Up or down, right? But if you'll just look at it for a second, let's just look at the Elliott Wave sequence here, guys. 1, 2, 3, 4, 5. A, B, C. Guys, where are we going? Where are we going? Eventually, I mean, we're about to go up, guys. We're about to do that. Now, whether we're at the bottom or we have another push down, that's the big question. But guys, I mean, that's what's going to happen. This is where we are. Okay? Don't let it take you by surprise. And so that's why when we see this move up like this, we're like, is this it? Is this the candle? Or is this the fake out before it goes up? So that's the big question. All right, so that's kind of the psychology of an Elliott Wave sequence. So why do I say that? Because you need to understand what the market is doing to your psychology. So what Elliott Wave does then is it prepares you for what the market is going to do. Guys, listen, the market moves repetitively in 5s and 3s. 5s and 3s. 5s and 3s. I wasn't laughing at people getting wrecked, by the way. Dave, I'll get to the measurements shortly. Okay, I'm just kind of catching up in the chat here. If it measures impulsive or corrective, you're basically saying it's a three-wave structure or a five-wave structure, kind of, sort of, because sometimes you'll have a what looks like a five-wave structure. To answer your question, you'll have a five-wave structure, but it measures correctively, and I'll explain that in just a minute. Okay. But it looks like five waves. So you can't just go by the number of waves. Those waves have to be properly related to each other. And I spent a lot longer on that psychology than I intended to do. So, and I've used a lot of my time. How many of you would just give me some feedback on what I just said? Now, I know it seems kind of intuitive, but was it helpful for you to kind of go through that a little bit, to just take a peek at your own psychology as the waves are moving, so you can just kind of understand yourself as this market moves? Was that helpful to you guys in any way? Does that make sense to you? And can you see where understanding Elliott Wave might help you know what to expect and be a lot more calm as things are moving along? Okay, thank y'all for that. I just want some feedback. It's really hard when you don't have a class. I can't see you guys. I can't know whether it's making sense to you or not, or you understand it. But I'm just a firm believer, guys, that your psychology is more important than your knowledge of what the market is doing. Okay. All right, but your psychology can be helped by knowing what the market is going to do. Okay, and that's why a lot of you watch my channel, because you're like, well, Jim seems to know where the market's going, and so I don't listen, guys. I don't know where the market's going. I don't know, but I'm applying Elliott Wave principles, and I have a general idea of the probabilities of which way price is moving. Okay. All right. So, hope you guys don't mind me drinking some tea while we're doing this. All right, so now let's do this. I wanted to kind of keep these to an hour, so we'll here's what we'll do. At 10:30, we'll take a poll. If you guys want to continue, then we'll continue for another 15-20 minutes. If you guys want to just stop and come back next week, we can stop and come back next week. You guys will let me know what you think is best, and all these are going to be recorded as well, so you can come back and watch these again, okay, and rewatch them. Okay, so now that we've kind of gone through the psychology, I just wanted to help you understand. So be careful. Let me just remind you, the market always does come back. So if you find yourself get caught in a position on that third wave, okay, either wait for the fourth wave to pull back and then you exit your position, which isn't a very big retrace, okay, or wait for those five waves to finish and then wait for the three waves back. That's a longer wait, okay? So that's what I personally do when I get because I still get caught in those third waves sometimes. I get a deer in the headlights. I didn't cut my trade properly. Psychology overwhelmed me, and and so basically, if that happens, I find myself waiting it out. Okay, so I usually wait that fifth, but it's dangerous. It's because that third wave can be extended. Oh man, it's horrible when the third wave is extended. But I just want to show you how many times the market comes back. I mean, just look at a chart. I mean, look here, guys. It went all the way up, but look, it came all the way back. And it continued. I mean, it just came all the way back. It took a long time. It took a year, but it came back. Okay, market came up. It's coming back. It's come back more than halfway to this point. Okay, then it's moved from 3,000 to 14,000. It's coming back. Okay, so the market will come back to you. Now, you don't want to get caught in that. It's better to cut your trades properly. Okay, but anyway, just remember the market does come back. All right, and basically it comes back on the correction or comes back on the reversal. Okay. So, 5 waves impulse, 3 waves corrective. That's what you need to know so far. Now, to answer Dave's question, David S., your question is, what does it mean to measure? Okay, so not only do you have a wave count that's 5 waves in an impulse, and a wave count that's 3 waves in a correction, but those waves are how do I say it? They're related to each other by certain measurements of length, okay? Yeah, Dave, we're in a bunch of 3 waves right now. And 3 waves, when you get 3 waved to death, Dave, that means we're in a correction. We're in the middle of a correction. and we're going to talk about complex. We're in a complex correction right now, and that's basically most of the. And we're going to talk about the difference between corrections here. And I guess before I get to before I get to the relationships, let's just look at Bitcoin here just for a second. This isn't the only chart you can look at, but let's just talk about the differences between the impulses and the corrections. Okay, just look on the chart with me for a second. Okay, let's look here. Okay, there's an impulse, right? It's up very fast. It's a pulse. It's quick. It's also called a motive wave. A motive wave. Motive for emotions. Okay, it's an emotional wave. Okay, so it's an impulsive wave or an impulse. Okay, so there's an impulse, and then what do you got here? The slow correction. Impulse, correction. Impulse, correction. Impulse, correction. Impulse, correction. And do you see how the size of those corrections changed at different points of those? Okay, so the basic market will do something like this. Okay, it'll be impulse, correction, impulse, correction, and that correction will just be some kind of ziggly something. Impulse, correction, impulse, correction, and we call them corrective structures. Okay, because there's so many different shapes and sizes of what those corrective structures can make. Okay. So on your chart, I want you to take your pen on TradingView right now, okay? And I want you on the daily, go to the daily time frame, okay? Pull up Bitcoin, which is BTC USD, okay? On your chart, you should have it. Get on the daily time frame, which is right next to here. You can pull down a drop box, scroll down to the 1 day chart. That means every candle is 1 day, okay? Yeah, this is recorded, Mr. Gonzalez. It is recorded. So yeah, absolutely. You can rewind and watch it. So what I want you to do now is identify the impulses on this up wave. So the trend is up, so that means the impulses are going to be up, okay? And the corrections are going to be down. So just take your pen, take your this little pen, the brush right here, and just draw an impulse like that, and then the corrective structure like this. Just kind of identify it. Just play with it for a second. I'll play with my chart here. So there's an impulse, corrective structure. There's an impulse, corrective structure. Now, we got an impulse here, corrective structure, impulse, corrective structure, impulse, corrective structure. See that? Okay, so you're learning the difference between an impulse and a corrective structure. Now, let's do this. Let's go to a smaller time frame, and I want to show you. Now, this was the daily. So let's go down to the 4-hour chart. Yeah, that's right. That's right, Merle. You see direction just from that. That's right. Actually, let's go down to the 1-hour chart. 1 hour. Sorry. Double click on the right over here, and that kind of auto centers it. Click and drag it, and then you can kind of manipulate the chart a little bit. And let's go over here back to the impulses. Pick any wave to the upside that was way back here when it was coming up from December to June when it was coming up. I'm going to show you this little area right here. I'm zooming in now. Look at what I'm zooming in on. So here's a wave right here. Okay. So I'm zooming really close in. I want you to see something. in general, we got an impulse correction. Okay. Now we got an impulse correction, impulse correction, impulse correction, and you're just going to see that over and over and over in the market. Impulse correction. So just kind of go through and identify those impulses. Impulse corrective structure. Impulse corrective structure. This is actually a larger. This corrective structure is actually right here. Oh. Am I losing you guys, or are we doing okay? Impulse corrective structure. They are numbered. Craig. So this is lesson 2, and it actually says it on the thumbnail. And I'm going to create a playlist as well. Yeah, impulses can go down. So that's on an uptrend. So let's look at the downtrend now. Good question. Unknown. Let's see. Alpha bid. Let's look at the down. So now we're gonna look at the trend change. See how this was going up. Now trend is going down. Okay. So now that trend is going down. Look now on the large time frame. This whole thing is a correction, right? But when you zoom in on it, okay, you're now dealing with impulses. We've got an impulse to the downside, correction to the upside. Impulse to the downside, correction to the upside. Okay, this whole thing. Okay, impulse to the downside, correction to the upside. Well, actually, that's kind of an impulse. All of this is corrective, but you can kind of tell what I mean, like that's an impulse there, right? This is an impulse, correction, impulse. Sorry, I got to be looking too, but you get the idea. But this complex correction, it's just full of impulses and corrections, okay? You see that impulse there, correction, impulse, correction, like that. So here we had a really big impulse right here. Impulse. Now what is all this? Well, either it's correction or reversal, because eventually the correction stops, right? And there's reversal. Okay? All right, so tonight, what we've looked at up to this point is how your emotions are affected by these waves and by the impulses. When the impulses are going and you're in the wrong side of that trade, it really screws you up, and it's designed to take your money. Okay, you eventually let it go, and you let it go at the wrong time. Okay, if you find yourself caught in a third wave or a big impulse, you need to wait for pullbacks. Okay, let it give it back to you a little bit, some of your loss, and then cut your trade or things like that. You'll learn that along the way. We'll talk about trade management down the road and how to manage a bad trade. That's going to be way down the road, okay, just in trading mechanics. Guys, this is going to take, I mean, we could be to the end of the year going through this stuff, okay? But week after week, we're just going to build your trading knowledge and understanding, okay? Okay. All right, it's close to 10:30. I had some more to teach you, but is that enough for tonight? Or do you want some more? I can do a little bit more, not to overwhelm you. I just wanted to kind of keep going with you little by little. Give me some feedback. I'm good. I'm going to be up watching our trade. I'm good for now. A bit more is good. Okay. Anybody else? Got to get off live. Okay, no problem. Watch the rest of it. Yeah, when you can. Dave, glad you made it. We'll do Shasta. We'll do a little bit more then. Okay, let's just begin thinking now about the relationship between the waves of an impulse wave. So, Dave, this is where I'm going to answer the question. How are those waves? Is it measuring impulsively, and how do we measure it? Okay, yeah, I don't mind more at all. We can do some more. Okay, here we go. All right, so let's talk about an impulse wave and how the waves are related to each other. This is critical, guys. Big deal, what I'm about to tell you. It's not just about counting waves, it's how are those waves related to each other, okay? Now, here's what I mean when I say related to each other. If I say to you, all right, here's a line, okay, and then I got another line right here. Now, let's see. This is line number 1, and this is line number 2. How are they related to each other? Which one's the larger wave? Which one is the larger wave, guys? 1 or 2? I'm going to let you guys figure that out. Which is the larger wave? And by answering it, it just lets me know you're with me. Number 2. Now, that's good. Everybody got it. Now, if number 2 is the bigger wave, now the question I want to ask is, how much bigger? What's the relationship in size to wave 2 of wave 2 to wave 1? How much bigger is it? Well, one way we could figure that out is take the line and put it right next to it, right? Put it right next to it and you say, okay, well, the wave up to this point right there, that's 100%. So wave 2 is at more than 100%, right? So we've got number 2 is bigger, right? 2 is bigger, and it's at least 100% of wave 1, but it's more than that. And if we had to guess, what would be the percentage more? Maybe 50% more? Maybe. So we would say that wave 2 then is related to wave 1 at 150%. Does that make sense? Now, that means this wave 2 is 150% of wave 1, roughly. Now, is there a tool in TradingView that lets us measure that comparison measure that without much trouble? And the answer is yeah. So you go over here, all right, the third one down from the left, click on that guy, and you're going to find the trend-based fib extension. Okay, the trend-based fib extension, and you're going to click on it. So now I've activated my trend-based fib extension. Now what I'm going to do, you can see how it's blue and activated there. What I'm going to do is I'm going to measure the first wave with 2 clicks. I'm going to start at the bottom, because that's where the wave starts, and I'm going to measure it by clicking the top and the bottom and the top of it. Okay. Now I've got 2 waves. I've measured. You see the dotted. I'm pointing to my screen. You see the dotted lines there? It's measured that wave. Now I'm going to tell my third click is I'm going to put it at the bottom of the next wave. Okay, at the bottom. So I'm going to say, okay, start measuring at the bottom of the next wave. Boom. And what you have here, I'm going to double click and see how accurate I was. I'm going to put 150%. So it's going to be a 1.5 relationship. We will make it purple and hit enter, and there we go. Look at that, guys. 1.5 right there on my screen. So this second wave was 1.5 or 150% of wave 1. So what I've just done is I've compared wave 1 to wave 2, and I've given you a relationship between the waves by a percentage. Okay, let me know if you guys are tracking with me so far. Let's do another one. Give me some feedback first, and let's do another one. If you're tracking, say tracking or something like that. Brentley's got it. Anybody else? Okay, where's the tool? Okay, on the left-hand bar on your screen, the third section down, click on it, and then you just kind of scroll down right here, trend-based fib extension. That's what you want. Okay, let's do another one. Okay, so if you didn't get the first one, let's get the second one. So I'm going to make a wave 1. So you do that too. Make some size of a wave on your screen. Okay, now this time let's make another one really big. Put them side by side. You can put the next one a little higher than the first one, like that. Okay, now take your trend-based fib extension tool right here, trend-based fib extension, click it. Now, what you're going to do, yeah, by the way, Joseph, that's right. on the big chart, yeah. Okay, so we're going to click the bottom, click the top, and what we've just done is measured that wave. We've given it a measurement with those 2 clicks. Now we're going to bring the third click. You see the dotted line, how it goes all the way across the screen? I can put this anywhere I want it. It doesn't matter where I put it. But as long as that dotted line is at the bottom of the next wave. And I like to get my numbers out of the way so I can see them. Click on it. Now, here's what you got. This wave compared to this wave is 268%. That means 2 of these plus another, 61.8% is how, that's the comparison of this line to that line. Okay? So that's measuring, that's comparing the lines, so to speak. Now let's take that and let's apply it to an Elliott wave. Okay? So we're going to create an impulse on your screen like this. Create 5 waves using your impulse tool. If I'm going too fast, let me know. I'll be glad to slow down. But create an impulse. How you do that is you click on that third little section here and you go down. That is incorrect. You go, it's 1, 2, 3, 4, 5, 6. The 6th one down, and you'll find Elliott impulse wave. 1, 2, 3, 4, 5. Awesome. Glad you're tracking. Sweet. So on all my videos in the mornings, you'll watch me and you see me throw that fib extension tool. I'm constantly measuring, and then I'm yelling out different fib levels, and you're like, "What's that mean? What's he talking about?" Well, now I'm explaining it to you. That there are corrective levels and impulsive levels, and I'm going to show you what the impulse level is. Okay? Copy. All right. Ivan, my man. Thank you for your service again. All right. Trend-based extension different from the fib retracement. Yes, it is. So unknown now. Yes, it's different. We'll talk about that another night, okay? All right, here we go. So draw yours. You can look on my screen first, but draw your 5 waves there. Okay? Now I'm just going to measure wave 1 by, I've already clicked on my my fib extension tool. I have it in my favorites bar down here. You can put it in your favorites bar by clicking the star next to it. Okay, so just star it, it's yellow, and then down here, make sure that star is activated in blue, and then your favorites toolbar will pop up on your screen. Excuse me, I just burped in the microphone. And yeah, and it'll be right there. And that's okay if you're 4 minutes behind, no problem. All right, I get it whenever you're there. All right, so here's what we're going to do. We're going to measure we're going to click on the bottom of this wave and the top of the wave. Okay, that measures the first wave. Okay, now you're going to scroll down, not scroll down, but you're going to come down, and at the bottom of this wave, okay, you're going to click your third click. And that's going to put the measurements there for you to see. I'm going to get rid of my 1.5 because I don't need it. There we go. All right, so what do we have here? So this is the size of wave 1, okay? And wave 3 is related to wave 1 at 1.618. What that means is this wave 3 on my screen is 161.8% of wave 1. And that's a key level for an impulse wave. The third wave generally needs to get to the 1.618 level. If it doesn't get up there, we question whether it's an impulse or not. So the 1.618 needs to be on your trend-based fib extension. And when you measure the first wave and compare it to the third wave, the top of the third wave needs to come to the 1.618. So that's when I say it needs to measure impulsively, that's what I mean. I need to see 5 waves, number 1. Number 2, I need to see that third wave come up to the 1.618 fib extension. I need to see that. If I see both of those things happen, I have an impulse. I've got 5 waves and the third wave comes to the 1.618, then I have an impulse wave. Those are the 2 things that I'm looking for. So let's kind of go. I'm going to go to the 2-minute chart for now to do some analysis on this wave. Let me show you how we apply this in real time. So here's the 2-minute chart. Okay. Now we've got to move up here. And it just kind of kept going. Really hard to count all that stuff, okay, on the small time frame. I'm not encouraging you to do this necessarily. I'm just showing you how we apply it. So here it is right here. We got this move up, and then we have a move down. Most likely that's a wave 1 and a wave 2. So here's what I'm going to do. I'm going to take my trend-based fib extension tool. I'm going to click on the very bottom of wave 1 and the top of wave 1. Done. Then I'm going to pull it down to the bottom of wave 2. Done. Now let's look at the relationship between this wave and this wave. You see it? Now the zigzagged through it, right? But look what I want you to see. At this point right now, this wave right here has come to the 1.276 fib extension. That means this wave is 127.6% of this wave. This, by the way, the 1.276, you might not have that on your chart. You just double click on the numbers, you can put it in there, okay, and it'll do it, 1.276. All right? Or you can do 1.272. That's the real fib extension, but a lot of times the 1.276, it will come to that. Now, here's what it does. Okay, so it's come so far to the 1.276. Is it done? Well, we don't know. But if it stops here and then price starts going that way, we know that this, look here, we got a 1, a 2, and a 3. It stopped at a corrective level. What are the corrective levels? Here they are right here. The 1-to-1 extension and the 1.276. When you have a 3-wave move, the 1-to-1 extension, that means this first wave and this third wave are usually related 1-to-1. That means 100% of each other. They're the same size. Or 1 plus a little bit more, 1.276, about 25% more. That's what it does. Now, If this wave continues on up to here, then what we've got on our hands is a 1, a 2, and a 3 wave, and now we've got the makings of an impulse wave. Now what does that mean? Well, if while this wave is being made, this is a 1, a 2, and a 3, what comes after that, guys? Well, if we get that third wave and this is an impulse wave, we need a pullback for a 4 wave, and then we're going to go up for a 5th wave. And what does that mean? We got an impulse wave, we got a corrective structure, but what's going to happen after that? We're going to get another, the likelihood is we're going to get another impulse wave. So that means we're going to go up. Price is going up, right? So that's exciting. So when we start to see an impulse wave to the upside, we're waiting for a correction and then another impulse wave. Correction, impulse wave. And you're going to basically see these 5-wave structure on every time frame. Let me zoom out to the 15-minute chart. Let me show you what it'll look like on the 15-minute chart. Okay? Here it is. 1, 2, 3, good night. Love you. 4, 5. Okay? And that's huge, man. That's big. That's big. Okay? But you can see impulses on every time frame. So here's what we got, guys. Just check it out. Let's just look at this wave right here. And it's about time to stop, okay? And we're gonna pick this up next week. We're gonna pick it back up next week. I'm gonna take some questions here in just a minute. Okay? But let's just check it out here. We've got 1, 5. Is that 5 waves? Maybe. 1, 2, 3, 4, 5. Okay, there's 5 waves. 2. Now, look here. 1, 2, 3, 4. What do we need, guys? 5. That's what I'm waiting for. I'm looking for that. I want to trade that, right? Well, how do I know when I'm going to get this move? How do I know when I'm going to get that? Answer, I need to start seeing impulse waves. And so you know what I've been doing? You know what I've been doing? Oh, sorry. I've been on the small time frame watching the shape of these waves. And I've been measuring them. And I'm like, okay, let me see an impulse wave. Let me see an impulse wave. Let me see an impulse wave. Okay. Trying to clear the screen here. All right, we're still sitting. And so what I do is I just go ahead and put my fibs on the screen and I leave them there. And then I go away from the computer and I come back and check, or I check my phone and I'm watching. And I'm watching that fib level. If we continue on higher, it's probably going to be impulsive. Now, here's the way I'm looking at it, by the way. This is 1, 2. This is of the third wave. 3, 4, 5. And that'll be all the 5 waves of the third wave. So we'd really have something like this. 1, 2, 3, 4, 5. And then what you've got is 5 waves of the third wave, like that. Now, some of y'all are freaking out. You're like, oh no, Bitcoin's going up and I'm missing it. What do we know after 5 waves, guys? What happens after 5 waves? If this is what we get, we're going to get a 3-wave move. There's your entry, and then you ride the next wave. Because this is on the 2-minute time frame. This is very small, okay? Very small. See how we're kind of getting a rejection right here off the 1276? Does that mean it's a permanent rejection? We'll have to wait and see. We'll have to wait and see. I see right here, just to show you, I'm on the 1 minute. Let's go to the 1 minute time frame. I don't encourage you to do this. I'm just showing you. You can see it. Look, can you see the waves? Can you see it, boys and girls? 1, 2, 3, 4, 5. Now let me just show you that these fibs happen on every time frame. I'm going to measure the first wave. 1, 2. See how this wave came up kind of to the 1618? See that? It's not perfect. 1, 2. There's your third wave, fourth wave, fifth wave. That's an impulse, at least by definition. You can have impulse waves within corrections. See that down? Now let's just look at this down. 1, 2, 3. Harder to see on the 1 minute, no doubt, but there it is. Now let me check the... Okay, so let's see. Let's see. We haven't hit it yet, but that doesn't mean we're not going to hit it. Taps. Why up? Why can it not go down? Well, here's the deal. When you begin to see an impulse wave to the upside, listen. Here's what you got. When you see an impulse wave to the upside, what's going to be after it? A correction. What happens after that? Another impulse. So 5 waves impulse, 3 wave correction, 5 wave impulse, 3 wave correction, 5 and 3, 5 and 3, until eventually you get a 5 wave to the upside, and then what happens is you get a 5 wave down. So there's by the way, guys, what does that look like? What does that look like? Who knows, boys and girls? What is that called? What is that formation? There it is. So when y'all say head and shoulders, do you know what I'm thinking? I'm thinking reversal. Okay, that's a 5 wave followed by a 5 wave, generally. Does that make sense, guys? Is it starting to click? Are y'all starting to get it? How we doing? There's so much here. I need to kind of wrap it up and just kind of summarize, and let's pick it up next week. $29 of you. You got the... How we doing? Doing okay? Okay, so let's summarize. I haven't got any feedback. I'm just going to keep rocking. Okay. Oh, people are catching up. Gotcha. People are rewinding. What did he say? Okay. Watch it again. All right. So let's just apply. I want to do it on a larger time frame, 15-minute. Let's just apply what we've learned. Okay. I'm going to zoom in on this wave right here. All right. Different debates here as to what that wave is right here. This looks like a 1, 2, 3 wave to me. Looks like 3 waves to me. There's a debate in the Elliott Wave world what that is, but that looks like 3 waves. Some people are counting this as a truncated 5th wave, okay, or this is the truncated 5th wave. Listen, doesn't matter. Let's just be simple with it right now. This is the hard part of Elliott Wave. I'm going to click on my trend base extension. I'm going to measure this first wave by clicking the bottom and then the top. And then I'm going to scroll down. I'm going to put it at the bottom of this 3rd wave right there. Boom. I want you to notice something. Price came up. Here's the 1618. See how this came up and touched the 1.618? That's like where a 3rd wave does its thing. But that's not the only level a 3rd wave. An extended 3rd wave can go to the 2.618. All right? The 2618. And that's what I think this is. This Elliott wave should be counted like this. 1, 2. Again, there's debate about this, and so I'm just not going to worry about the higher level thinking right now. Truncated wave, the real fast truncated wave. usually you got 1, 2, 3, 4, and then 5 is higher than the third. In a truncated wave, you got 1, 2, 3, 4, 5. The fifth wave is truncated, smaller, and it's a fifth wave, but it doesn't come up higher than the third wave. That's a truncated wave. Okay, so back to this measurement. We got a 1, 2. Now, this one came up to the 2618 right there. That's a good 3 level. So what we should probably do is 1, 2, 3, 4, and this is the fifth wave. And there's your impulse wave right there. Okay? You say, Jim, what about this wave? Isn't this your fifth wave? I don't think so. I'm not counting it as the fifth wave, and here's why. What we have now, either we have a truncated C wave, or we have what's called an expanded flat correction. Okay, and this is higher level correction. Okay, but this is nothing more than an ABC, but it's called an expanded flat. We'll talk about it another day. Okay, right there is an expanded flat. Then what we had after that, okay, is we got a 1 wave followed by a 2 wave. Well, what's this? That's a 1 and a 2 as well, but of the next wave. So what comes after a 2? The 3 wave, right? So let's count it. We got 1, 2. Now I'm going to change my color. Oh, nope, don't want to do that. Let's change my color. Now we've got 1, 2, 3, 4, 5. Is that done? I think the third wave's done. Is that 3, 4, 5? So it's really hard to see the waves. So let's do this. You never count without measuring. So let's measure. So right here, trend-based fib extension. I'm going to put it on the bottom of the 1, top of 1. Boom. There's the 1, 6, 1, 8, 2, 6, 1, 8, 3, 6, 1, 8. Okay, this probably is a truncated fifth, or it's an ABC. I don't know. It's really hard. See, sometimes you can't see all the waves in here, so this might be, so different ways to count it. 1, 2, 3, 4, 5, like that, maybe. Now we're getting a corrective structure. Let me zoom it, and what do we got here? Let's see. Well, we got a wave, a wave, and a wave. There's 3 waves. Guys, what might this be? Could be a reversal. Right? And that's what I want to know. And that's what I'm trading right now. I'm trading to the upside here. I think this might be a reversal, and I'm hoping it continues to go up to the upside. Because if we get a move right here, then we're going to catch this wave, and that's what I'm trying to catch. That's what I want to catch. You know what this could be, though? You know what this could be? This could be a 3 wave and then a 3 wave down, okay? And we're going to talk about that another day. And that's why in the mornings on my program, I'm telling you, well, it could do this, it could do this. I don't know what it's going to do. Here's the way it measures, and this is what I think it's going to do because of the way it measures. And these are the skills that I'm beginning to show you how to do. Real quick, can you discuss the leading diagonals? Just a falling wedge. Okay. This is more complex taps, but really fast. Sometimes a wave will begin a new a 5-wave sequence will be led in the first wave with a diagonal. Okay, and the diagonal looks like this. It's generally in the shape of a wedge, and it's the first wave. Okay, but here's the tricky part of it. It's 3 waves. Okay, let me get the red. So what happens is you get a 3-wave structure for a 1, 3-wave for a 2, 3-wave for a 3, 4, 5, and it does this trick. So it looks like this. It kind of looks like 3 waves every wave, but you'll see 5 of them, and it creates a diagonal shape that's shaped like a wedge. And you say whenever, and so when you learn chart patterns, you're like, oh, whenever you see a wedge, you generally, that's going to fall out, but it doesn't fall straight out. Okay, it just falls out of it short, and that's the 2 wave, and then we go up for the 3rd wave. So when you see like when you see kind of a reversal area and like a shape like that, and then 5 waves like that, that's a good telltale that it's a 1 wave. Now you can also have an ending diagonal. So the 5th wave can be that shape as well. So the 5th wave can be this. Like that. That's an ending diagonal. So that's a beginning diagonal, leading diagonal, and that's a form of an impulse wave, okay? But it's more complex. I'm just trying to keep it simple for now. All right. So what you need to practice doing, your homework is, number 1, just watch the psychology stuff again. Make sure you're getting your psychology straight, okay? Number 2, I want you to start practicing measuring and comparing waves on the chart, okay? So what I want you to do is, like this wave, for instance. Let's see. That's kind of a tough one, but let's compare this wave to this wave. So I'm going to get the trim. I'm going to measure that wave and then bring it down. Okay, this came to the 618 extension. We haven't talked about that, but that to me is 5 waves. So the way I'm counting this right now, and this is why I entered the trade: 1, 2, 3, 4, 5. Had a 3-wave pullback. This is the entry of the trade. 1, 2, 3, 4, 5. I'm waiting to see that. That's what I want to see. And I want to see a nice big wave. So we'll see if we get that continuation or not. But I want you to start measuring these waves and their relationship. Let me remind you of the extensions, okay? If it's the 1 or the 1276, you've probably got an A, B, and a C. If that 3rd wave continues up here to the 1618, it's not an ABC. What you've got on your hands is a 1, 2, 3. That means you should be looking for a 4 and then a 5. You should be looking for a pullback and then more upside. Now, if price stops at the 1 or the 1276, what you're going to be looking for, since that's an ABC, that means the impulse direction then is down. Okay? The direction is down for impulse. If you have a correction to the upside, then the impulse is down. If you have a correction to the downside, the impulse is up. Okay? So I want you to start identifying the difference between an impulse and a correction. Let me show you something really cool. We got this wave moving now. It's kind of moving up here. So let's go down to the 1-minute chart, and this is kind of what I do. Let's just look at this wave right here. Okay? Let's see what you see. Let's measure it. I'm going to measure that to that. Ooh, where's it going, y'all? It's going. It's coming up here. We've passed the 1276. What could that be? If it stops short of the 1618 and reverses, probably corrective. It's probably just an ABC. It's just a big one and then coming down. But if this starts moving past, oh buddy, it's on like Donkey Kong. I'm looking at 1, 2, 3, 4, 5 of the 3rd wave. That's a 3rd wave. 1, 2, 3, 4, 5, like that. And so you just got to begin measuring these and just begin understanding. All right, that's enough for tonight. That's an hour and a half, and that's a lot. Okay, so I hope that's helpful. Any questions I can answer? Oh, I just lost you. Let's see, live chat. There we go. I lost the live chat. Got it. Retry connect. There we go. All right. Any questions before you leave? Oh yeah. I'm not going to leave yet. This is your chance to ask questions. Okay. So what are your questions? Let me talk about just how we're going to apply this for our trading. Okay. Let me just talk about this for a second. If you get a 1 wave here, okay. Here, let me do it this way. Okay, so when price starts coming up, you're like, oh, I need to get in the trade up here. Don't do that. Don't get in on the trade as soon as you see a reversal. Oh, price is going up. Let me get in. No, 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 no. That's bad. You get in right here, because what happens after this wave is finished? It comes back this way. What's going to happen to your psychology? Oh, no, it's going against me, right? And it could be going against you, but you don't know that. And so you're freaking out. So when we trade, what you do is if price starts moving up, you count those waves. You see what kind of wave it is. You see what's the nature of that wave. All right, and then you wait for it. So if you see 5 waves in it and it's going up, then what should you expect after 5 waves? 3 waves down. Once you get those 3 waves down, where's your entry point? Your entry's right there. You enter the trade to the upside. Now let's take a peek at what we're getting right here. Okay, this is pretty interesting. Let's apply this here. See if we can figure it out. I'm going to measure this wave to there. What do you notice, guys? This is a 1 and a 2, and then this came up to the 1618 of this wave. So the way I'm counting this right now, even though we're getting a reversal right here, this is the way I would count this. 1, 2, all that's 3. We're getting the 4th wave, and then we're going to go up for 5. And then all of that is going to be a 3rd wave. So we'd have 1, 2, 3, 4, 5. That's the way I'm counting that right now. Okay, so we haven't talked about counting subwaves yet, but we're going to have to get that. But when you see that candle come straight down, how are your emotions doing? Oh no, it's going down, right? No, you got to start counting the waves, see what you've got, see the relationship between them. Okay, so that's an application there. All right. Ivan, thanks for stopping by, bro. Godspeed to you, man. Appreciate it. All right. I'm going to leave you to your questions. We'll talk more about trading the Elliott waves down the road. But for now, what are your questions? Any questions you have? Mind blown. Okay. Awesome. Cool. I'm glad. I hope. Was that clear and plain? Are you starting to understand? We're going to review this next week. Don't think we're just going to be done. We're going to review. There's 27 of you. I hope you'll watch this and start practicing these tools as you go. All right. If you guys need some help in trading and you want to join our trading group, it's designed for learners. I mean, I don't teach necessarily one-on-one, though there is a level of support that you can give, that I can give a little bit more extra attention to you. But if you want to be around a group of people where we're all talking about these things and learning these things, and I'm giving extra information, feel free to join the Patreon group if you're not part of it. It's well worth it, and you'll get more of this more often. Okay? You now have a clue. Yeah, I think you'll now begin to understand my videos as I'll say now I'm throwing the fibs on there, and you say, oh yeah, that's a corrective wave. That means we're probably moving down or up, and now you'll have an understanding of where we're, what it might do. So you need to start practicing these things. Watch this video a couple of times, and hope that helps you. Okay. All right, guys. Love you. Glad you hung out with me. I hope that was helpful. Don't forget to leave some awesome comments for me. That helps the YouTube algorithm. So you might close the chat, and then after it's done, you might come back and put a comment in the actual video itself, so for others to see, and that would just help me out if you would. Okay. All right, good night. Cheers to you. We'll talk to you next Thursday, another class. So we'll keep bringing the classes on next Thursday. So we're going to keep adding to what you know. We're going to review what we've gone over, and we'll practice it together, and then we'll add to what we know. All right? You guys have a fantastic night. We're going to go ahead and stop the stream. We'll talk to you later. Bye-bye.